Let me now introduce our presenter, Almarie Falbo. Almarie is a SCORE mentor and a business operations executive with extensive experience in identifying and reframing business and operational issues. Her passion is applying her business and management insights developed over decades of work experience across organizations, both large and small. Ms. Falbo's work career includes Xerox, Bausch & Lomb, NEC, where she served as the COO, Allegiant Technologies, and Avaya. She served on several advisory boards for startups. Almarie earned her MBA in finance from the University of Rochester and her bachelor's degree in mathematics from the State University of New York at Buffalo. Almarie, thanks for doing this for us tonight. Appreciate it very much. The microphone and the controls are yours.
Thank you. Thank you, Ted. And thank you, everyone, for joining us this evening. Ted mentioned starting and managing your own business. It's a wonderful all-day seminar for anyone who's thinking about starting a business, or if you have a business and you want to leap to that next level. So you go as a refresher, you could go just as a checklist, but it's always a wonderful event. And the reason why I'm saying that is I know I have several colleagues from the last session joining us this evening on crowdfunding. One of the items in starting and managing your own business at the end of the day is funding and funding alternatives. And whenever we get into crowdfunding, there is always the request to talk more about it, to talk about alternate financing as other items. So for the team who knows me, I love alternate financing. There's definitely money available for businesses in many, many different ways. Crowdfunding is unique and special, and it's a relatively new program. I want to say around less than 10 years. And in today's session, we're going to talk about what those basics are of crowdfunding. We'll talk a little bit more about choosing options and choosing financing options, and then really what are the best success factors for that. I'd also like to just add that if you have any questions, please reach out to me, reach out to your SCORE mentor, reach out through score.org. We will, 1 hour never does this topic justice. It's a wonderful teaser. It's a wonderful introduction. But when you're ready to dive in, please reach out, have a colleague that's experienced work with you. Otherwise, it could be way, way, way too much. And you don't want to reinvent what we already know. So today we're going to cover lots of choices for funding and the different types of crowdfunding, why it was put in place, and then regulation crowdfunding, which is an SEC program at a federal level. I'm going to show you an old one from crowdfunding, and we're going to use that as an example. And then we're going to go back through and talk about critical success factors in summary. So this is a slide that I always go through. There are so many alternatives for financing, so many. As you go through your business, expect to use a mosaic of different ones. If you're starting out, maybe you're going to use family and friends. Maybe you're going to get a loan. Maybe microloans are available and you're going to go that direction. Or you have a unique industry like agriculture and there's a grant available. Things pop up all the time for other types of alternatives. If you're going with investors, you always know that angel investors, private equity, they have millions of dollars. So to compete with the millions of dollars is difficult. That's where this regulation crowdfunding came in, and you're going to hear more about how that happens. But angel investors, private equity, Shark Tank, you can sell stock, and you can do things like factoring your accounts receivable, getting a merchant cash advance loan, getting SBA guaranteed loans. However, this evening, we're going to talk about crowdfunding. But I'd like to position it to say it's one more thing in your funding bag of tricks that you could look at as an alternative and consider, or something to build up for, so that you could say, you know what, I want to do crowdfunding, but I'm not going to do it right now. I'm going to build up for it and maybe kick it off in the beginning of next year. So just think that there's lots of choices, and you're probably going to use a mix of them, depending upon where you are, what you're trying to do, what the fit is for your business, and there's no wrong answer. Please consider whatever funding you go forward with, what the return on that investment is for the funds that you secure for your business. So there's no wrong interest rate, there's no wrong structure. Just make sure you know what the return on the investment is and how that mix of funding sources is working for you. So let's go into crowdfunding, okay? There's two traditional ones that I know you're going to be familiar with. And if you look at this slide, the numbers on this slide were from 2019, and I updated them just a day ago because this doesn't change very much, okay? It's gone through COVID and it hasn't changed very much. So it still is returning, or the results are pretty much the same as what they always were. You all know the donation one, GoFundMe. And what I have here is the mission statements for each one of these crowdfunding platforms. GoFundMe, you hear it on the news all the time, especially like with what happened recently in Hawaii. You want to give a donation, and you want to give it from, you want to make sure it goes through an anonymous source or a protected source. GoFundMe is a donation-based crowdfunding platform that we all know we've used for that. The other one is the one everybody knows, Kickstarter. Kickstarter, Indiegogo, and this is Kickstarter's mission statement. But a couple of things I want you to see here. Look at that success rate. In 2019, Kickstarter funded about 38% of all the businesses that were put on the platform. And as of a day or two ago, it's 40%. So it's still about a third of everything that goes on Kickstarter is funded. 604,000 projects were launched, and 246 were successfully funded. Something to note about Kickstarter, and anything in green is current as of when I pulled the numbers 2 days ago. 53% of the projects that were funded received between $1,000 and I'll say $10,000. I always say that Kickstarter is good. If you're looking for $12,000, $13,000, $14,000, you want to go Kickstarter, you want to go Indiegogo. When I add in what the amount that was received from $1,000, under $1,000, add another 13 points to this. So when you get done, 63% of the projects that were funded through Kickstarter received under $10,000. So if you're looking for a quick start, you're looking for a little bit of money, you're looking for something to get off the ground, it's Kickstarter. You always hear with my colleagues that are in Buffalo, you hear about Lloyd's Taco Truck. And Lloyd's Taco Trucks went through Kickstarter. And they go, well, you know, Lloyd's Taco Trucks got the $1 million. Well, out of all these projects, there were only 767 of them that received $1 million. That's a success rate. Now, does it fit? It absolutely fits. Because going through Kickstarter, getting started with this, getting some funds that way are really, really important. So enter regulation crowdfunding. Sometimes it's called rewards-based, sometimes it's called equity-based. It was introduced by the SEC in May of 2016. And if you're looking to raise, it used to be $1 million. Now it's up to 5 million because a colleague brought me up to speed over the weekend and I went back looking at it. It is now over 5 million. You could raise up to $5 million within a year. And I'm good. I know everybody's microphones are muted, but if you have a sheet of paper or a tablet or something, put the number in your mind as to how successful you think regulation crowdfunding is. I don't know what you're thinking, but how about 95 to 96%? So a huge majority, significant businesses that go and secure the funds through regulation crowdfunding, 95 to 96% are successful in the receiving significant funds. I also,
Almarie?
yes.
Yeah, you might want to take a look at Wayne Seguin's question that's in the chat.
And I don't have the chat pulled up. What is Wayne's question?
Okay, let me give you Wayne's question here. Wayne's question is, other than ROI, how else should a business choose between the different crowdfunding platforms like Kickstarter, Indiegogo, GoFundMe, and or equity-based platforms?
Okay, great question. The ROI reflects any funding. So whether or not you go into crowdfunding, you're thinking about, do I get an SBA guaranteed loan? Do I use my credit card? Do I factor the receivables? If I'm seasonal, I might want to do that. In all cases, don't look at the interest rate, especially because it goes up and down and we know what markets we're in right now, okay? So don't look at the interest rate. Look at how you're using the money, how many turns you're going to get by that money, and what the return on that investment is. Now, specifically regarding crowdfunding, if it's a donation, you use GoFundMe. If you're looking for $12,000, $13,000, $14,000, you go Kickstarter, again, Indiegogo. And we're going to talk more about the regulation crowdfunding, and you could graduate to that, okay, when you're ready. So that's a great question that'll be answered through this program, through the webinar this evening. Now, I'm a fan of this, and regulation crowdfunding is the way. You wonder how a lot of businesses locally are getting funded in the Buffalo area, like the breweries, because they aren't going to get a traditional loan unless it's personally guaranteed. They're considered high risk. All those breweries, all those startups, they're getting funded this way, okay? A couple of items here to note. The Security and Exchange Commission, actually, they did something good. They put in this regulation crowdfunding because of Kickstarter and Indiegogo, because it was, I want to say, very much out there, not controlled, and they wanted to make sure that businesses, as they move forward, have a controlled way to raise the capital. What's great about this and why it was put in place was we talked about it on alternative, on the slide of alternative financing. You have to have millions of dollars if you're going to invest in a startup. You have to, in order to have equity or buy shares, it's millions of dollars. Investing in startups was not available to people like you and me. So this program of regulation crowdfunding was put in place so your customers can invest in you. And at the time this was written, $40 was the average amount that you needed to invest. So I could get onto a platform, and for $40, I owned a share in a startup. Where before, maybe I needed 4 million or 40 million to participate in startups. So this provides startups, the access to startups to everybody, okay? I recently checked today to see what the average minimum was, because at this time, it was as low as $10 for a barbershop, for a spa. The current minimum is running around $100. So for $100, you could own a share in a startup and get the same sort of return that an equity partner would get. The people that, and we'll return to this thought over and over again, your customers want to invest in you. And it's the way to get your customers engaged, to hold those emails, to keep them engaged, to keep them with you as you continue through your journey with your business, that they can give you the feedback, that you have them in an email, you can provide more offers. They're invested in you. For the $100, which I always say, $10 would have been Starbucks, $100 is probably a couple bottles of good wine. For $100, you can own a share or own a portion of a startup that you believe in. And one of the items also is it's a high-risk investment. So as you move forward with Kickstarter, Indiegogo, it's small amounts. You're talking $10,000, $14,000 in total, small amounts. When you're working with equity crowdfunding or regulation crowdfunding, the amount that an individual can invest is top-stacked, and we're going to talk about that later. So they're protected. And also for $100, that's a Christmas present. I can think of, I spent $100 at Publix the other day and almost nothing. It's exciting, it's startups, and you too can play in that market.
Yeah.
So,
Almarie,
yes.
I have another question on the chat. Can you also talk to the risk that I face as an investor, even though the amount invested may be $1,000, for example?
Sure, it's just like you're buying stock. It's just like you're buying stock. So you're buying stock. If it turns into be a junk stock or junk bond, it's the exact same risk as being in the market. You own a share of that company, or you're getting a return from that company, because it doesn't always have to be a share. So it is money that I'm going to say that you can afford to lose. And I'm going to show you a little bit about accredited and non-accredited later, so you can see how that risk is mitigated. But it's just like stock.
Can a business invest versus individuals for regulation funding? For example?
Yes.
Okay.
Yeah. So let's say you have an LLC and you want to buy a share. Your LLC follows the same rules, okay, that we'll talk about. Yes, a business can purchase the shares. Yes. Now, I don't know about Kickstarter, Indiegogo. I don't know if you can on those platforms, but I know you can through the regulation crowdfunding. Yes, you can. So there are 4 items. If you go to a website, you're going to see there's 4 items that the SEC always talks to. It's got to be placed through a registered intermediary. The aggregate can't be more than 5 million that you can raise, but you could raise it in tranches through the year. Okay. You can now include non-accredited investors, but it's limited. And the disclosures have to be put in through the intermediary to the SEC. We're going to talk about those and go through all of those a little bit slower right now. But you'll see that this discussion on crowdfunding includes addressing those items, okay? First of all, the SEC put this in place. Like I said, it was a good thing, because before there were regulations that prevented somebody from doing this. It prevented me from giving $100 or $50 in a risk situation for a startup. So what the SEC actually did is they removed regulations, controlled regulations, so that limited offerings could go in place. The other thing that it did, it allowed you to go across the whole United States. This is a US-based program. However, we'll talk about the intermediary that I like to use, and Ted's also familiar with them, Republic. I see it's now extended possibly where you can have Canadian and European investors. But this is a US-based program to raise funds. We talked about it before. Yes.
Just two other things that are in the chat just before we go forward. Would I, as a startup business, owe any of the investors out-of-pocket expenses if my business flopped?
No, and we'll talk to that. You're going to set the guidelines. You're going to set those rules. Okay.
All right, one more.
Because that's part of the disclosures, and we'll talk about that later. So Ted, remind me later, because I want to go back into that when we talk about the one example.
Okay, and can you use, I'm not sure I'm clear on this. Can you use this to buy a business that's already running?
If you own the business, it's a great question. The answer is you got to own the business. You've got to own the business. So, great question. Timing, right? Timing. So it's timing. Because we were looking at, and now I'm out, you guys know me pretty well. We were looking at bundling distressed businesses, 2 or 3 or 4 together, to allow you to invest, in a piece of pulling together, let's say, a group of medical companies. The answer is you have to own them. You've got to own them. Okay. So there are requirements by state. So I go back and forth between New York and Florida. If I was going to do crowdfunding in Florida, I'd have to follow the Florida regulations. If I was going to do crowdfunding in New York, I'd have to follow the New York regulations. If I was going to do crowdfunding in Pennsylvania or California, I'd have to follow those regulations. Regulation crowdfunding goes across them all. Now, you can still choose to only offer it within your state. Chances are what you're going to do at a regulation crowdfunding with an application is going to look exactly the same as what you're going to do for a state. It's going to be similar. So you could prepare by going regulation crowdfunding at the SEC level. And then at the end, if you're going to be limited to a state, you could choose to do that too. The other thing I wanted to go back to when we were talking about the difference between like a Kickstarter regulation crowdfunding, if you do the work for regulation crowdfunding, you're doing the same work you'd have to do for Kickstarter. Kickstarter, you got to have an offering. It's got to be in your business plan. You've got to tell them how you're going to pay it back. I'm going to tell you it better be in your business plan and know how your financials work. It's the exact same information. Now, difference in Kickstarter, they don't inspect it. That's why it's only 35 to 40% return. That's why this is 95, 96% return. Because before you go for regulation crowdfunding, you're pretty sure you're going to hit it. And you have experts that are working with you, whether it's your score team or whether it's the platform that you're working with, they're sure you're going to make it when you go forward. Where Kickstarter, you want to see what happens, throw it against the wall, see what sticks. But it should be the same work that you're doing, whether you're going this way or the other way. Just the regulation crowdfunding is going to be a lot more detailed, but it should be the same steps. Okay. So that's one of the benefits now. You can go state by state, or you can go across the US at a national level. You can raise up to $5 million over a 12-month period. And it includes both accredited and non-accredited investors. A non-accredited investor means that their net worth or their income is below a certain level. And I'll show you some examples of that. Now, the laws apply to those. I talked about that a little bit at an SEC level. Okay, that goes across all of these. Now, I want to talk about, I talked a little bit about the states, that the states have regulations, but I want to go to this next item and spend some time on it. With regulation crowdfunding, It's offered through a registered intermediary. A registered intermediary, think of it as a mini stock broker, okay? But they're not doing stocks. All they're doing is acting as your intermediary to offer this. They are your guidance, working with the SEC, getting all the disclosures in, getting the application in, and so they're your control. They're the ones who are making sure that the portion of your investors, of non-accredited investors, is within the right proportion. They're the ones who are making sure that when you say a non-accredited investor or an investor, someone isn't taking all their money, going to a casino and pulling a slot machine. Okay, they are doing those controls for you. They're also managing the programs, and with registered intermediaries, a broker or dealer, you're going to go out, okay, and you're going to raise some funds, but they're going to open it up to their whole network across the United States. And everybody has the opportunity to participate in raising the funds through crowdfunding. There are different intermediaries that are registered. There are some that are only for real estate. There are some that are only for technology. The one that I like that personally is called Republic, and it's republic.com. You can go on there right now and you're going to see things like, I was on there this afternoon. The one I loved from a couple of years ago is you can buy a condo on a cruise ship. But it's also, you're going to see technology, you'll see fashion, you'll see food. There's a coffee right there on there right now where you can invest in a coffee startup. And it's republic.com. They perform that function, okay? They're going to perform that audit for the SEC. They're performing the structure, but they're also, they're making sure your application is good. They're submitting your application. And we'll talk about, I know somebody's going to probably say, how much does it cost me? I'll tell you in a minute. And they are like your safety net, and they're also a safety net for the investors, because they will be reviewing the investors to make sure that they're eligible. So what do you need in an application? That's easy. If you've got a business plan, you've got everything you need, because it asks for the disclosures with the SEC. They're standard. What's the name of your company? Do you have an address? What is your ownership structure? You don't have to own it. You can be a company also, like an LLC, a subchapter S. You could be a company. What are the names of the directors? And this requirement of including anybody who owns 20% more share, that's just a financial requirement. If you go to a bank for a loan, they need the information on anybody who owns more than 20%. That's just standard across the whole financial world right now. What is the business? Do you have a business plan? What are your financials? Okay. And how are you going to use these funds? Because your investors are going to want to know too, how you're going to do that. Now, specific to the offering, and I'll show you an example, you're going to set the targeted amount that you want to raise in that offering. So I'm going to just share with you, if you want to raise a couple of $100,000 as a start and build up, go regulation crowdfunding, because you can go up to 5 million and you could do several tranches throughout the year. Okay. And so you're going to say, for this offering, I want to raise $500,000. The deadline, by the way, what is the speed of this? They've been offering in 30-day windows. So it turns on, and then the deadline is usually 30 days later. What happens if you raise more than what your target amount was? You've got to tell them. Do you want to change the targeted amount, or do you want them to return the investment, return the people that came in later? What do you want to do for those oversubscriptions or canceling an investment? If you don't raise the minimum, all the money that comes in through the investors, because they're mini investors, through your customers, is held in an escrow account. And if you don't raise your minimum, they return the money to everybody. The other item is related party transactions is you have to disclose if you already have, let's say, an angel investor or someone investing in your company, it's going to be disclosed. And then any risks and mitigants, just like in a business plan, what are your opportunities? What are your risks and mitigants? And how would you offset them? One I always think of is diversity, which is if you have one manufacturing location, what are you doing to fail safe if something happens like we're seeing right now with the auto strike? How do you diversify? So what's it going to cost you? It's going to cost you about $5,000 to do the application if Republic does it for you. The $5,000 assumes that they're writing your business plan. So think of it as for their administrative cost, it's going to cost you about $5,000. Then they're going to take 6% of what was raised. And if you have an equity like a stock that you're offering, by the way, you don't have to, they're going to take 6% of that. Okay. Now, they don't take this until you raise the funds. So they may ask for a nominal amount, which is under $1,000, okay, to start to move forward. But the rest of this is collected from whatever they collect as it moves forward. So you don't have to have this money up front. You just have to have a phenomenal email list. And we'll talk about that as to how you would raise that. So let me talk about risk. Let me go back to risk for a moment, because this was asked before. How much can an individual invest? And if you're accredited, your net worth is over $1 million. And what's capped, you're capped at $100,000 investment in the regulation crowdfunding. The maximum you used to be able to invest was $100,000. It's $107,000. Don't ask me where the 7 came from. It was probably a handshake across the aisle, but $107,000 is the most that any one person or entity can invest in your crowdfunding offering. You are not eligible if you have a net worth of less than $100,000. They won't take your $100 or your $10 or your $50. Okay. But as long as your net worth is over $100,000, then you're eligible to participate in the regulation crowdfunding. And so you could see here, and again, the presentation's available to you. You could see what the different tiers are and what the amounts of the investment are that a person can make. Okay. Here's some examples. This will also come your way. The most an individual can invest, or a company can invest. If it's a company, it's your balance sheet. Okay, the value of your balance sheet instead of your net worth. But the limit you can invest across all the crowdfunding offerings. So if you're not accredited and you're low, you got a net worth of over 100,000, the most you can invest in any of them. So you want to buy a share of a cruise ship and a share of the coffee and a share of a technology company, the most that you can invest is 2,000. And your platform, your intermediary, will do all this work for you. Okay. One thing about Republic, they're community-based. I like them because they want to develop a community. When we were talking to them, and then COVID came in the middle of it, they had a program called a community fund. So Buffalo could have been a community leader if we offered a lot of crowdfunding initiatives across several businesses where we raised over $1 million for Buffalo across several offerings. Then you became a community of Republic. Again, it could be one of real estate, one of technology, one of food, one of cruise ships, but again, what you're looking for in your situation is if you want to really tie to a technology company, you tie to a technology platform. If you really want to go with real estate or an REIT, you could go to a real estate broker. Okay. Republic is general, community-based. They believe that if your community develops, then you're going to develop. And they also believe that startups should be available to everyone. And that's why the investment, like I said, the minimums I could see right now around $100. Let's talk about, we're going to spend some time on this next item. This was a old crowdfunding offer through Republic. Now, I did a cut and paste. It was really about 3 or 4 pages long. I want to go through this a little bit to show you just the key things you're going to have. First of all, as you can see, there's deal highlights. That is, what is your business? What does it do? Who's your market? Customers sound familiar. Just tell me about your technology. You could see that they have some private equity in here that they had to disclose, where they already received like 3.4 million from alternate investors. And they have a equity cap or goal that they were going to, by 2020, be worth. Who knows if they were. These are the things when you had said, the person who asked, what about the expenses they incur and whether or not you're responsible for them? You're going to disclose, you set the rules, okay? And you set them any way you want to. If you want to say to someone, if we'll reimburse $25 of your expenses, usually it's silent and the answer is no. You are not reimbursing any investor against their $100 investment in you. You're going to talk about the minimum investment. And like I had shared before, it looks like the minimum right now is running about $100. So if I wanted to invest in Demnis, I am investing $100 as the minimum, okay? Now, I know that you can go down to $50. I know you could go down to $10. With inflation where we are, let's just take it as you can have an investment that's very reasonable to be able to participate in this startup. And in this startup, you have the equivalent of Silicon Valley because you've got investors of 3.4 million who are in there who are all owning private equity. And I got a lot of people who are investing $100 at a time. Okay. The funding goal is you are going to set how much you would like from the crowdfunding initiative. If you don't hit the minimum, remember, all the money that's collected goes into an escrow account and it gets returned to anybody who gave you money. Okay. In this case, they said the minimum that they'd like from the crowdfunding initiative is a total of $50,000 is the minimum. However, the maximum at this time, the 1.07 was the maximum. Today, your maximum is 1.1, but they send the funding goal at $1 million, the cap. If you go over that, Republic or your intermediary is going to hold the overage because it's outside the rules and they'll block it, okay? And they will send that investment back to anyone or just not take it. The deadline is usually 30 days out. So in this case, when this was done, they were thinking a 3-month window. Since then, it's like a 30-day window, and they've been very successful in raising the funds for the business. Type of security. I want to talk about CrowdSafe. You're going to, and you can see here, bonuses and perks. So what you get if you make an investment. This is CrowdSafe. You don't have to give stock. All right. CrowdSafe is revenue sharing. So if I made $100 investment, there's going to be a revenue sharing formula that you as the business disclose in your plan with the application, okay? So you have a forecast, and you're gonna say, okay, I'm gonna reach $50,000 of revenue. I'm gonna reach $100,000 of revenue. I'm gonna hit $1 million of revenue. At those milestones, the person who made the $100 investment is going to get something back. So when you hit the first milestone in your plan and what you disclosed, maybe they get back $25. Then you can hit the second milestone. And your milestone says, oh, wow, in the plan you disclosed, you're going to give them another $25, okay? What's nice about CrowdSafe with revenue sharing, they don't own stock. They're getting a return on their investment. As soon as they get double their investment back, so they got $200 back, okay? They're out. They're no longer investors. They no longer get a return. So that's important to know. And so that's why the CrowdSafe is really a revenue sharing formula that's terrific, okay? The other thing here is, if you notice, if I paid $100, I get my name on the website and I get a thank you. If I gave them $1,000, I got everything above and I got a cozy for my cup, okay? If I invested $2,500, I got everything above and a keychain. If I invested $5,000, I got a drone, okay? And that was what their product was. So when you do this, and if you look at the very, very bottom, it says invest $107,000, that's the max. If somebody invests $107,000, give them a great party, okay? Give them something great, do a blowout, but you always want to put that in. That was like the old, Neiman Marcus catalog, which was his and hers helicopters or things like that. That is just a marketing ploy. What this crowdfunding is a marketing program, okay? Because of the customers who are investing in you. The way the regulation crowdfunding works, and let's, in order to participate, or what they like to see, and we're going to talk a little bit more about this as we go through the summary, but what they expect is that you have this integrated into your business plan, okay? So I just want to go to the next, even though it says summary, because of the risk, the amount someone can invest is limited. So the risk is limited, your investment's limited, and you saw accredited and not accredited investors. So no one can make it a slot machine in a casino. You can raise 5 million in a 1-year period. You could run in tranches. So you could run 500,000, 1,000, get started, get the seed money, go to the next one. You can do that. The funds come in small amounts. As you saw, $100 in the Indemnis example, while they have the higher ones, there's a lot of $100 investments. It is heavily weighted towards the low end. But this is a marketing program for you too. But the funds are coming in lots of small amounts, okay? You've got to be represented by a dealer broker through a funding portal. We talked about Republic, and but there are others out there. Okay, the process. This is the way the process works, and I want to tie with it, you must have a following, all right? So to start, what a Republic expects is that through your email list or Facebook or website or customers, remember, this is a phenomenal marketing program too, that when you go live on day one, traffic is driven to Republic's site or the intermediary site to start the program and start the investments being registered. They would like your base to be able to raise about 30% of what the total offering is. Okay. Now, before you go live, you can send out emails. You can do MailChimp, you could do webinars, you can talk to people, you can tell your customers about it, you can be very loud and noisy about it coming. And oh, by the way, Republic's going to be also, they're going to say it's coming, it's coming, it's coming. As soon as it goes live, you can no longer participate. And that's the SEC rule. They don't want the business involved in the offer. You can participate once. You could send out one email during that time period, during those 30 days, as a reminder to make the investment. You can put it on your website, but your website has to be a link to Republic during that period. So the reason why you want to have a following is you're going to kick it off and get interest. And then what Republic's going to do is offer it to their whole base. And they've funded over 600 businesses so far. I think it was 607 so far when I looked at it. Look at what they have, because they're also there and you can watch the progress, but they've funded over 607. And people are investing, the $100 at a time, the $50 at a time. So people are watching this because you're buying little shares of startups that you would not see because it was going on in Silicon Valley and you never even know it was there unless you had millions or hundreds of thousands to invest. You got to have a business plan because you have to incorporate this offering into that plan. And you're going to incorporate it from the marketing side and the financial side. All right. And let me also just tell you something else. It's like stock. It's not a liability on your balance sheet. So this does not have to be paid back. It is not carried as a liability on your balance sheet. The funds come in, it's an asset on your balance sheet. Okay. Just think of it as stock. If I bought a share of Apple and it goes down, Apple doesn't carry that as a liability on their balance sheet. All it means is the value of their asset has gone down. Their cash has gone down. So you don't owe it. Okay? Your business doesn't carry it as a liability. So now, but your business plan has to include, let's say in the financials where you talked about, if you hit your first milestone, you're going to give everybody who bought a share $25. I want to see that in your financials. I want to see that when you hit that milestone and you've got the revenue, that you have the cost of paying them back in your financials. Okay. I want to see that in it. And I want to see your marketing plan to see how you're going to raise the interest and build up, your customer base in advance. I want to see it. And I want to see how you're going to offer it. Do you have those keychains costed out in there? Do you have that big party if they hit the numbers costed out in there? So it's got to be integrated into your business plan. And as far as following the SEC guidelines, when we talk about an audit, you do not have to have audited financial statements. You just have to follow the rules. So you don't have to have them audited. I believe it's 2 or 3 years in over so many $1 million of revenue, then they're going to ask for it to be audited. But that's a standard process and a standard program that you would do anyway. Okay. So the financials have to be prepared in the same way that you would for a normal financial statement. So you've got to have a crowdfunding plan. Your marketing program, the one I showed you was top heavy, but let's say you were coffee. Okay, so for $100, I get a coffee mug. For $500, maybe I get a subscription service to coffee where 4 times a year you're going to send me a pound of coffee. For that was $100, $500. Maybe for $1,000, I get a set of 4 coffee mugs, a subscription to coffee. It's of course I get the thank you card, my name on the website, and maybe once a year you have a special invitation event where if they can get there, traveled there, then they're invited to a party. You've got to detail that out in your crowdfunding campaign, right? Your investors and supporters want you to be successful. They want you to be successful. That's why they're giving you the funds. They're an affinity group. Keep them involved, develop them. You're going to get all the email information, all the emails of the people how to contact them, how to keep them involved. One of the requirements is annually, you got to set out just an annual report. The intermediary will do that for you. So at minimum, as long as the program is alive and you're still doing the revenue sharing, or there are still investors there, you got to send out an annual report. If you're going to do it, develop it yourself, but they're going to encourage you to stay in contact with these people. They are your customers. They're your supporters. Get them involved. Help them, ask them to sample the next beta offering of coffee. Ask them what they like. Do they need decaffeinated? Do they like it flavored? Use them as a focus group. Stay in touch with them. It builds your customer base, okay? And like we talked about, all the funds are kept in escrow account. If the minimum isn't met, then the funds go back, okay? Do the what ifs, and just like in your business plan, do a what if. What if I get all this money? What if I don't get this money? What if I run it in 2 or 3 tranches? What if I start with Kickstarter for 10,000 and then I prepare to do equity crowdfunding as I build my client base, okay? So do your what ifs, just like you would on your business plan, what your risks are, what your mitigants are. You got to have a following, but I would tell you, if you're a business, you better have customers, because without customers, I could hear it, you don't have any money. So you got to have customers. You've got to have a business plan, and the business plan just has to integrate the crowdfunding plan in your crowdfunding campaign. So that is that's crowdfunding, and that's about a 1-hour overview. Ted, do we have any questions in the chat, or do we have any questions from individuals, or is there anything else you'd like me to cover?
Yeah, there are some other questions that I've kind of held up till you finished going through the regulation crowdfunding. But let me just ask you a question in terms of strategy. If I'm a small business and I don't have a big customer base, okay, let's say, uh, from a strategy point of view, would it be desirable to first think about doing a Kickstarter campaign and then expanding my contact base based on the Kickstarter campaign, and then considering crowdfunding, a regulation crowdfunding?
Sure, absolutely. You can do that. You can mix them. I would say to you, I would almost go, it depends. It depends. Okay. It depends on how extensive your email list is and your friends and supporters and how much you can raise. Go for a minimum. Go for a low minimum, $50,000, $100,000 in the regulation crowdfunding. If you're looking at those sort of numbers, start small in the regulation crowdfunding. If you're looking for 10 or 12,000 and you're not ready to be as large as 100,000, then you go Kickstarter. So it depends on where your business is and what you're trying to do with it. Okay. So if all you need is 10 or 12, yeah, go Kickstarter. Absolutely. But I'm going to tell you, you still need a business plan. You still need those customers. Or if you're a little bit bigger than that, go regulation crowdfunding and just start with a low minimum. And then you could do 2 or 3 or 4 tranches during the year. So yeah, it's a fair strategy. Yeah.
Yeah, I'm just thinking of trying to expand your contact base with a Kickstarter campaign to begin with. If you're truly small, you're not ready to go regulation crowdfunding. Okay, let me go into some of the other things which I did not send your way during the presentation. Well, how do we get the word out about this this kind of regulation funding? It seems to be a little bit obscure. It seems like.
Yeah, well, it is, and but it's used. It's like I had mentioned in the Buffalo area, the breweries, this is how they're getting funded. Okay.
Mhm.
And excuse me, this is how they're getting funded. And this is how they're also building their customers. It is
Mhm.
big here in Florida. It's just in Western New York, it's a little bit behind. I would welcome any thoughts you have on getting it out there. And again, SCORE's here, I'm here, intermediaries are here, Republic's very, very open. We'll help you do it. Just reach out to us. But yes, how do we get the word out? I would love any thoughts on that. I think we all would like that.
Okay. Wayne has had several questions on here. I'll begin one with one of Wayne's. Would a strategy of a B2B business offering actual customers to invest in the company, would this be beneficial to them?
Sure, sure,
Right.
sure. Because B2B is fine. If you go check out some of the offerings, you could go to B2B. However, usually your customer is, well, from the back end, it's targeted at your customer making that $100 investment. But you could go B2B with this. Sure. Sure.
Sure.
It would work. And it
Okay,
wouldn't be.
Andrew had a question. So as long as you own,
Yeah,
so as long as you own, could a startup be an online commerce business?
yeah, sure. Absolutely. You don't have to have bricks and mortar. Not at all.
Okay.
Okay. You just have to have a business. It just has to be a business with revenue. Yeah. No, you don't have to be bricks and mortar at all. Not at all.
Okay.
You can have a complete company that's 100% done through Amazon or virtual. Not at all. You could be a service business that, works virtually like we are right here. No, bricks and mortar is not a requirement. Not at all. You just have to be a business.
Okay. So a business that is developing apps, for example, could go ahead and do this.
Sure.
Okay.
Sure. Actually, I think I saw one today on Republic, which was an app. You can invest in an app. Yes.
Okay.
Yes.
What
Yep.
are key performance indicator? What key performance indicators should my business be sure to track for regulation funding campaign?
Whatever you track in your business plan. Okay. The only thing you're adding is think of it as you're giving a dividend for a stock. That's the only thing that's overlaid on your business plan. So remember, all this money's coming into your balance sheet. You're not paying it back. You're not paying it back. If your company goes under, you lose the investment. You lose the $100. You lose the 1 share of stock. However, you're going to be paying dividends out. Now, and that's a great question from a different way. I like the revenue sharing where they get almost, you get back twice your investment. If you put in 100, you get 200, you get 200 back, you're out. However, you could choose to give stock instead. You choose what that offering is. If for $100, you give them a share of stock instead, you could do that. Okay. It's your choice to build that offer, but it has to be disclosed.
Okay.
So just be real specific with that offer. And it's not a liability. This is equity on your balance sheet. But you're going to have to make sure it's your business plan. It's your forecast. It's how your revenue's coming in. It's your customers. It's your P&L. The only thing you're adding is now when I hit that milestone, I'm going to pay out, I don't know how much, $100,000 to all these investors at $25 for every investor. You just have to build it into your financials. It's a line item. That's your critical success factor isn't the crowdfunding. Your critical success factor is running your business with your dashboard and having the 5 or 6 metrics that you are going to monitor and have just because you're a business, whether or not you have the crowdfunding. So whatever you're monitoring sales, or you're monitoring customers, or you're monitoring dollars per sale, okay? That's what you're doing. Because it's a win-win for everybody. Your business is successful, everybody's successful.
Wayne has two related questions here. Any advice on avoiding common risks in regulation campaigns, and what legal considerations or issues should businesses be aware of?
Legal issues, if you make the commitment in the disclosures, you got to deliver it. Okay, you got to deliver it. The disclosures, think of them as a real true offering, like a stock offering. Okay, think of it that way. So legally, what you say you're going to do in those disclosures are what you're going to do. Absolutely.
Okay.
Your risk,
as far as avoiding common risks in regulation campaigns?
you better have, it's the same risk as you would with your business. You better have your risks and mitigants. Well, probably I would tell you, you're going to be really public now. People are going to know you're out there, and you're going to have a lot of these little investors. So the risk would be, make sure you can handle it. Make sure you keep them informed. Make sure you keep them in the loop, because, you know, not all customers are happy customers, not all investors. You know, even though you think of the board meetings, or you think about, you know, the 1 a year annual meeting, and the one guy walks down the aisle and he goes to the microphone and he says, "You did this to me," right? You're going to have the one guy who's going to do that to you through the email, even if it's maybe $100 investment. So you want to be sure, you want to treat it as if it's a public disclosure. But I'll tell you, if you do that in Indiegogo or Kickstarter, you've got the same risks. If anything, you're more protected here, because that intermediary has you fail-safed. Okay, but it's the same risks if you went to Indiegogo or to Kickstarter.
Could you elaborate on strategies for segmenting and targeting potential broker dealers?
Yes. Yes. It depends on what your business is and what you're trying to do. Okay. If you're B2B real estate, you don't go with Republic. You're going with a broker dealer who specializes in that industry. It's segmented, it's siloed. If you are a high-tech company, I mean, real high-tech company, not like the drones we talked about, but you're really into heavy software, you may want to go with an intermediary that specializes in, or technology. If you're healthcare and you're into some specialized technology for healthcare, you might go with the intermediary that depends on that. If you're a small business and you've got customers everywhere and you're more broad than narrow, look at a Republic. The other thing I would tell you is interview 2 or 3 of them. Make sure you like them. Make sure you like the person you're working with, because that person's going to be like a virtual member of your team. Okay, for a while, they're going to be, you know, sitting virtually around the table with you in your business. Interview 2 or 3 of them. If you're not sure, do I want to go broad? Do I want to go deep in your real estate? Set up a call with the real estate one and set up a call with the broad one and see which way you want to go. Okay, because they're going to be with you, and the investors they bring in will be with you. So I would, first of all, think industry specific, and make sure you're absolutely prepared when you make those calls. You have the list, you have the questions you want to ask. It's almost like a criteria matrix for selection. You know why you're asking it, and you're trying to decide which way to go, and then reach out to them. It's their business. They'd love to hear from you, and do that interview. Okay. And have in your mind what you want, what you think your business premise is, and what you'd like to offer. And interview them. And I would go both ways. If you're But if you're really, really high tech, it's probably going to drive you crazy to go community. So I would match the brokers. The last time I looked at this about a year or so ago, there were 30 or 40 brokers, intermediaries. So it's not like you're looking at thousands and thousands. And if you had 2 or 3 phone calls, 2 or 3 email exchanges, you'd get a good feel for who you wanted to go with.
Okay, what is required of businesses after a successfully funded campaign? I'm presuming this is both from a Kickstarter point of view and a regulation funding point of view, but what is required of businesses after a successfully funded campaign? One-time requirements and yearly requirements or otherwise?
You have to do what you said you're going to do in the disclosures. So let's take it in a couple of pieces, all right? If you're using revenue sharing, you have a business plan, you've got to disclose when you hit those milestones. You've got to perform the way you said you were going to perform, all right? You got to perform that way. The one mandatory requirement is an annual report. As long as you're still active and let's say you didn't use revenue sharing. Well, they've stopped, but you did revenue sharing, they're all gone. Then it's back to you, okay? But you have to perform exactly the way you're going to perform. So, like, I was going to go back to Indemis for a moment. They said at $500, they're going to give you a keychain. You got to give them the keychain, okay? It may be $2,000 because they were using revenue sharing. As soon as your business hits $10 million of revenue, you're going to give them $25 back. You got to give them the $25 back. But it's simple. It's laying out the plan and just executing the plan. Now, let's say it doesn't make it. You're not responsible. Okay? Unless you do something like, and I'm smiling when I say this, you've got gold bricks hidden around in your house, right? Unless you do something that was illegal with your business in those funds, we all know forecasts bounce, all right? If you're making the money faster, great, you pay it back. If the money comes in longer, gets stretched out a little bit more, well, then you're going to pay when it comes in. But you've got to be realistic and disclose those metrics to your investors, okay? And you've got to let them know basically where your program is. You got to keep them current, but the minimum requirement is the annual report. It's a minimum requirement. And I would tell you your requirement is you got to stay true to your plan. You can't write the plan and then 30 days later say, I'm not going to do it.
Okay.
Okay.
Michael has a question, which I think we've already touched on, but anyway, is there any way to go forward if you don't have much of a base to begin with?
Yeah, you need well, we touched about it. You could either go small first with Kickstarter, Indiegogo, or you go with the low minimum on the regulation crowdfunding. Because the real advantage here with the regulation crowdfunding is you're working in higher dollars, not the $100 minimum. I mean, that's no different than a Kickstarter or Indiegogo or $50 minimum. You're not. That's not what I'm talking about. What I'm talking about here is you're working with higher dollars that you're collecting for your business. So that I think is a factor as to what to look at.
Okay, Michael, I think we've answered this question already. If you want to get in touch with Republic, you go to republic.com.
Correct.
So that's how we get in touch. Lauren has a question. You mentioned this is typically a 30-day.
Yeah.
On here.
Yeah, 30 days. So when it goes live, I think I'm going to anticipate what I think you're asking. When it goes live on Republic or an intermediary, those funds are coming in within 30 days. You're going to raise your minimum within 30 days. It's a 30-day.
Is that from application to payment disbursement, the 30-day period?
No, it's from go live to disbursement.
Okay.
So it's a window in which you're raising the funds. It's a 30-day window. So I don't know how long it's going to take you to get that application in place. I don't know how long it's going to take you, you know? Some people have this off the shelf. I know I've got my stuff. I could do it off the shelf in like 2 or 3 days and write it up because I've got all my stuff. It might take you time because you might have to build that business plan and, you know, get your LLC, get your EIN, decide what your offerings are. You know, it depends. You take the time you need to take to make sure that application's right. As soon as it goes live, okay, and then shuts down 30 days later, you will have raised the funds. Then after the 30 days, once the funds are in, there's the disbursements to you, you know, the payment back to Republic, and then you start the program. I will tell you, those disbursements to you, I'm pulling a rough number out. You're going to have your funds quickly, 30 days max. 30 days max.
Okay.
So you get the funds very, very quickly.
Lauren continues with her question. You have to have a business plan, correct? I know sometimes I've heard that in order to receive grants and funding, you have to have your business plan in place. So
Yeah.
I guess that's just a comment from Lauren at that point. Okay. All right. We have, let me
Now, the
see.
business plan doesn't have to be elaborate. If this is our colleague Lauren, you know it doesn't have to be elaborate. Customer financial people process, and you have to be able to talk to it. Okay, it doesn't have to be elaborate, but you should have that. It's your roadmap for where you're going to. So it's more for you, and it's a communications tool that says, if you're talking to someone, this is my business, this is what I am, I know what it is, I've got it in control. And like we've all talked many times, they probably are going to read the executive summary and look at the numbers. So, but you got to have it. It's putting the documents together.
Okay, there's one last question from that I see here in the chat, which is from Wayne. Do you have any advice on best practices for community management after a campaign?
Oh, sure. Manage your customer base. Absolutely. There was another webinar that I love to share. Every single email address that you have, that you stay in contact with, that email is worth $1,000 over your business time frame. So your email list is your ATM machine. So you want to cultivate that customer base, cultivate that relationship, and really focus on them. And your customers are special. Your customers are your revenue source. But every single email that you have, whether or not they buy, on average, count on $1,000 from them through your ATM machine.
Okay, well, that's all that I have in the chat, Almarie. If you want to shut down your share screen for a second, I'll ask if there is anybody still on this call that would like to speak directly to Almarie. I can open up microphones. If you raise your hand, anybody wants to raise their hand? Lauren has got her hand up.
Yeah, and I have a
Already.
question too. Anybody who has any ideas on how to expand this and get the word out, we're in. Hi, Lauren.
Hello.
Hi.
Hi. Can you hear me?
Yes.
Yes.
Okay. So yeah, really quick. Maybe I put a typo on my last question. I was saying that I've heard that when it comes to funding or grants, sometimes they expect you to match the price. So like one of the local grants here, they're saying, hey, I will give you $25,000, but you have to show me that you have $25,000 in order to qualify. So that was really my question, not necessarily just about the business plan, but do I have to match what I'm requesting?
No. No.
Okay.
But on top of that, but let me just say, Lauren, you could go for grants too. I would tell you, remember up front where I said you can use a mosaic of different ways of funding?
Correct.
Go for grants too. Go for grants too. So, your business should do that. You should go for grants too. And maybe Then you're gonna use the regulation crowdfunding to match the grant, if you get the grant.
Right, right.
You're gonna use a mosaic, and you're gonna have a checking account, so you're gonna use a bank too. You know, you're gonna use a
Got
mosaic.
it.
Mhm. And I saw the one question, yes, Ted, you're gonna send out the presentation to everyone with the video, with the, correct? This is all going
Yes.
to all the participants.
Yes, yes.
That's all I
Anybody
needed.
else?
Thank you.
No, go ahead, Lauren.
Thanks, Lauren.
No, I was saying
Anybody-
that was it for me. Thank you.
Great, thank you.
Anybody else? If you put your hand up, I'll open your microphone. We have
We have
Mr.
Wayne.
Wayne. Hi,
Hi, Wayne.
go for it.
This was amazing. Thank you.
Given your business and how I know your business, pick up those emails when you're out and about at the conferences. This is a way to fund for you, very much so.
Okay. Sounds very interesting, to be honest.
Great.
We have,
So I had one clarifying question. So if I'm understanding correctly, you have fundamentally two options. A, offer equity. B, offer some sort of a ROI proposition.
Revenue sharing. It's a revenue
Oh,
share.
revenue share. Okay.
Yes, yes, it's a revenue share. Offer a revenue
And-
share.
Andrew had his hand up. Andrew?
Andrew's on mute.
Andrew, you can open your mic.
Oh,
There it is.
There
sorry.
it is.
Okay. So I did have a few questions. My screen did cut out earlier, so if you did address it, I do apologize. So the 107,000 cap, is that to donate to your funding, or is that what you need to
No,
earn each year
The most.
to
Oh.
both?
it's the most any one business or person can, as an investor, buy through the crowdfunding. So if I was going to invest in your business through crowdfunding, the most I could put in is 107,000 in a year.
Oh, okay. Okay, good. And then my other question was, for, to buy a business, can you do like online e-commerce? Like I know you said you have to own the business. So if I start an e-commerce business and, I need like $50,000 worth of shoes, could I do that or?
Sure. Well, what you would do is it would be, let's say your business is shoes, okay? What you're doing is I'm investing in your shoe business, not in buying the shoes. So you're offering me the opportunity to give you $100 for your business, which is to go out and buy shoes or design shoes and offer them.
Okay.
Yeah, you can use
Cool.
the funds. Like I said before, you just have to disclose how you're going to use the funds. You can use them for inventory, you can use them for working capital, you can use them for development. You've got to disclose how you're going to use the funds. And that
Okay.
goes in your disclosures. And I'm going to say it, and it should be in your business plan, right?
Oh, yeah.
Yeah, it's just a sharing of your plan.
Yeah. So you can disclose that you're going to do inventory. Just don't disclose that you're going to do inventory to Almarie.
Yeah, the team knows I don't like inventory unless it's going to turn fast. I'm not an inventory person.
Lauren
And,
has her hand. Yeah, Lauren
sorry,
has her hand up. Oh, I'm sorry.
Yeah, no, yeah, really quick. I know someone asked this question a little bit ago about how to find which way to get the crowdfunding, or like which way you would apply to get the crowdfunding for a salon. Which form of crowdfunding would you recommend that I work to?
Yeah, knowing your business, you've got to tell me first your business plan and what you're trying to do.
Okay, so it's a multi-service salon, a beauty salon,
Right,
hair,
no,
nails.
right, I know, but I mean, I want to see your plan. Are you going to raise are
No.
you going to be $1 million of revenue in a year, or are you going to be 50,000? Because
Okay.
okay, because it's think of it as I'm an investor You want me to give you the $100, I'm gonna say, what am I investing in? Am I
Okay.
gonna invest in
So
building?
that actually brings up a question in my mind as well is, can these be regional or local? Like,
Sure.
for example, a local crowdfunding campaign, and then she can basically have everybody in the area, fund it. And then like at certain funding levels, they get a free manicure or a free whatever the thing is.
Sure, she can, but then she may want to restrict it to, let's say, in New York State. Remember, we talked about you can go state by state? Okay,
Right, right.
I'm gonna hold it local. I don't know if I want to do that. I think what I would tell you instead is figure out how I can send beauty products, or figure out how, I can make an offer on that array and go the regulation crowdfunding if you really need the money. Okay. So like I said, it depends on what you're trying to do in your plan and how you're building it up.
I think I cut off Andrew. Andrew, did you have another comment?
Yes. So could you buy a franchise with this also?
Good question.
Probably not. But I'm going to say it differently. Okay. And let me give you an example. And by the way, you can use it for nonprofits too. Okay. I'm going to use this example. I was on the board of trustees at the Strong Museum in Rochester, New York. The board of Strong Museum's food court is all franchises. Other than Bill Gray's, they went through DOT and it's all franchises. So when it expanded with the butterfly atrium, and now they expanded with the technology, so the Strong Museum as a nonprofit owns franchises. You can crowdfund the Strong Museum. So if your business, depending upon what your business was, so it was a museum that owned food franchises. It was, I don't know, a car dealership that owned a cleaning franchise. Then the crowdfunding would be on the car dealership, not on the franchise. Ted, did I explain that the right way?
Okay, no, I understand that. Okay. Anybody else?
I have a Wendy raised her hand.
Wait a minute, Wendy. Okay, go ahead, Wendy. Open up your mic.
Hi, can you hear me?
Yes.
Did I hear you say you can use crowdfunding for nonprofits?
Yes.
Can you use them for like scholarships as well?
Yes.
Hmm.
Then I would go into GoFundMe because it's a donation.
Oh,
Remember, you're going to have to pay it. You're telling them it's like you're buying stock. You're going to pay it back. You're going to give them something. So how is your revenue going to pay them back the $25 when you hit the milestones? But yes, you can. You would go through GoFundMe.
thank you.
Sure. All right. Well,
Okay, we have Mike. Mike, I'm gonna open up your microphone. Michael? Michael? Did you have a question or a comment, Michael? Oh, Michael O'May. Okay. Let's go to Wendy. Do you still have a question?
no, I think it was an okay with the nonprofit.
Okay.
No, I'm all set. Thank you.
Okay. Thanks, Wendy.
Okay, and Michael's hand is, all right, that's it. And
Good.
we have hit 8 o'clock on the dot. Oh,
Hey, we're
goodness.
good, Ted. We're good.
Wow. Wow, you are fabulous. Almarie, thank you so much for the presentation on crowdfunding. And like I said, we will be sending out a link to the recording of this session. and it'll be going out within the next 24 hours, along with a PDF copy of the slides. So you will all have the opportunity to go ahead and revisit the recording and look at the slides again. So you will be getting.
Let me just add, reach us through SCORE, Western New York SCORE. Okay. Any questions at all? We're here.
Okay. And also you will be getting within, I would say probably the next 24 to 48 hours, a request for evaluation of this presentation and this webinar. So would appreciate everyone going ahead and filling out that evaluation and sending it back in. Thank you so much for being with us tonight. Thanks again, Almarie, for the presentation. Look forward to having you on further webinars. And don't forget, starting and managing your own business, Saturday, October 14th, all day out there at the CalSpan facility opposite the Buffalo Airport. Thanks. Have a great night,
Thanks,
folks.
everyone. Bye-bye.
Good night.
Thank you.
Thank you.